Despite ETF outflows in gold, the metal continues to show resilience, says my guest today, Mike McGlone of ETF Securities. He joins me in studio. Mike, thanks so much for being with us.
Thanks for having me.
So let's start by talking gold. The metal really getting a boost here post-Fed. It hit a 4-week high on Thursday. Despite the negative outflows we're seeing in the ETFs here, Mike, how is the metal set up?
I think the best way to describe it is impressive resilience. Gold has a lot of reasons to go down. The stock market just made new highs. The dollar's been strong this year, yet it's hanging in there. And it's had those ETF outflows. I don't know exactly where that's coming from. Maybe it's some profit taking. There hasn't been a lot of profits to take. The point is, it's hanging in there. It's holding in despite the fact there's a lot of reasons it should go down. So I think that's pretty good.
But silver really has a different story here. If we're looking at ETF holdings with the metal, it's on track to have its best month since August 2013. Why the strong demand, Mike?
Silver, I think, is reacting the similar way ETFs did to oil last year. When oil collapsed, ETF flows were very positive. Now, we've seen outflows there recently as people take profits. I think that's what's happening in silver. It's kind of stuck in this range. And a lot of analysts see it as just very cheap. Cost of production, supply-demand trends, and as you've mentioned before, a lot of demand from India. But ETF flows have been very positive. In fact, on the year now, the only positive flows in all the precious metal ETFs have been in silver.
Now, I know you're really eyeing the silver-gold ratio, which hasn't moved much. Does this concern you?
Definitely. It's averaging around 74. It's elevated. And the way I look at the silver-gold ratio is gold is, store value, silver is more industrial production. When that ratio remains elevated, it's somewhat of a negative indicator for economic growth. And that's the last time it was this elevated was after the crisis when we had the big collapse in 2008 and 2009. The fact it's remaining elevated is really scaring me. And I think it's indicative of what's been happening. We've had downgrades in economic estimates. We've had weak auto sales. And that silver-gold ratio seems to be more of a forward-looking indicator of what might be coming ahead. And hopefully it's not more weak economic global growth.
Now, looking at the PGMs now, we'll be on a panel discussion next week. And I was just at a conference where many of the analysts I was speaking to said that palladium really has the best story now, fundamentally speaking. Mike, do you agree?
Well, I've been hearing that for a while.
Right.
I do agree, but I have to admit I'm very concerned when we all agree. And we all agree. The fundamentals are very good. The problem with palladium is it's really predicated on the fact we're going to have this consumer demand in global vehicle sales. And they've been really disappointing. Global vehicle sales, as of what we know, the data as of the end of April, this year are only running an increase of about 0.5%. Last year, they increased 3%. China auto sales are not running as fast as most people expected. So we're really worried about that demand. Obviously, some supply is coming on, but that demand most people had expected is just not happening so far this year.
So what are you liking right now, Mike?
Well, I think I'm liking what's happening in silver. It's attractive. Silver and gold looks very attractive. And I'm very worried about this global economic situation. Not so much that, it's what the markets are telling us. This weakness in platinum and palladium, hopefully it's going to be just for a short term. Supply and demand trend should really rule in the long term. But the fact that they're weak and gold and silver have been strong is indicating that the global economy is probably not doing as well as a lot of people had hoped or expected.
Mike, thanks so much for your thoughts.
Thanks for having me.
And thank you for watching. We'll see you next week. Reporting from New York, I'm Daniela Cambone.